Hello, friends. Welcome back to our show, Text Time with Anil Gandhi. I'm your host, Varish. This week, we have come up with another very interesting topic, home office deductions. As like most of us are working from home in the last 2 years, so it's a topic for you. Our renowned tax expert, Anil Gandhi, will share knowledge on that. I will brief you guys about Anil Gandhi. Anil Gandhi is Forbes 2022 official member with 17 years of experience as finance controller, CFO, and holds senior executive positions. So let's welcome Anil Gandhi to our show. Welcome, Anilji, to our show.
Thanks, Varish.
Wonderful. So in today's session, we are going to discuss at length about 100% deductible meal expenses and employer reaction and parties. So let's dive in. Anilji, please walk us through that.
Sure, Varish. This is a very interesting topic, just like how we did for the last week. Last week, we did home office expenses. And the next very popular topic is meals and entertainment expenses. As an individual, as a business owner, as an employee, we all spend so much of money. When we go out at restaurants, we spend money. So I do get a lot of questions. Can I claim this? Can I claim this? What are the limits? Are there any daily limits? A different set of questions I get on day-to-day basis. So today's session, I'm going to talk about in detail. Let's get into the topic. So in the recent, just 1-2 years back, if you look into that, in general, historically since 1986, IRS has been allowing meals and business meals expenses in the tax returns of business tax returns only to the extent of 50%. Like example, if you spend $1,000 for the meals expenses in a year for a business purpose, only 50% of your total expenses is allowed. But with the recent introduction of the Consolidated Appropriation Act since 2021, that is since last year, there is a very big change. Very big change was brought by IRS. So from now, for the last year, for the 2021 and also for the 2022, any business owner, they can claim up to 100% of their expenses as a tax reduction when they file a tax returns. This is a big change from 50 to 100%. I have so many clients who spend hundreds of thousands of dollars on the meals on the business meals expenses, like because they have the sales team, they travel a lot, and their business owners go and meet a lot of their clients, or maybe some new agents. Different scenarios. They spend a lot of money for the food, and all those business meals expenses are deducted 100% from the last year onwards, for the last year and also for the current year. IRS has given a clarification saying that whenever you want to claim this as an expense, don't have to pay directly to the restaurant. Like example, if you are using an Uber Eats or Grubhub, you are not directly paying to the restaurant, but you are paying to a mediator. At the same time, you don't need to go and dine in at the restaurant. You can even just go for a takeout, and to go or takeout, still you are eligible to claim business meals expenses to the 100%, up to 100% of the expenses for the year 2022.
That's a very interesting topic, and it's a good start.
Yes.
So are there any business meal rules that there must be adhered in order to qualify for the deductions?
Of course, yes. IRS opens the doors, but always there are terms and conditions. Okay. So there are 2 rules which I want to talk now. The first rule is you can claim these expenses, but those expenses has to be incurred in line to ordinary necessary business expenses. So it should be really required for the business to run the business. It's an ordinary and a necessary. And the second rule IRS says is, come on, you can claim your expenses, but you cannot claim lavish or extravagant business meals, very expensive meals. You are not authorized to claim as an expenses. IRS has released a few clarifications on this. IRS will not stop allowing any expenses just because it is expensive. So in simple terms, you don't need to worry about the rule 2, because rule 2 is there, but there is a clarification followed. So as long as those are business and business expenses, ordinary and necessary, come on, you are good to claim expenses. And other thing is, third rule I want to talk about here is, if you're incurring some expenses, it should be business relevant. It means if I go and meet a friend, I cannot claim those expenses for the restaurant food expenses as a business expense. There should be a purpose for the business, and it should be for to conduct a business. It can be, you may be talking with a service provider, you may be talking with a vendor, you may be talking with a potential client, you may be organizing some party, business event, gathering, any of those things, but it should be business purpose only. Otherwise, you cannot claim these expenses.
Okay. Okay. So the restaurant is the key here. So what is the definition of restaurant according to IRS?
Yes, it is really key here, because some people come and ask me, I bought some items from the grocery stores. Can I go and claim it? I go to the grocery stores and can I claim these expenses? Or there are different places where you get the food. But as per IRS, the restaurant means it's a business who prepares and sells food or beverages to the retail customers for the immediate consumption. It means if you want to store your house, storage, if you want to store your food, that is not a restaurant. It has to be an immediate consumption. So if it is not like example, as you're saying that you may be able to buy some pre-packaged items, food items from maybe from grocery stores or maybe from our fuel stations, but you are not eligible to claim 100% of the expenses. Otherwise, if it's not restaurant, still you are, as long as they are business related, pre-packaged food, all those things are also allowed, but only 50% of the expense. The basic rule is any of these expenses are 50%, but advanced as per the CAA Act, if you're incurring expenses at the restaurant or through the restaurant, then you can claim 100% of your expenses as a business meals expenses.
So food purchased from places like Costco or convenience store does not qualify for 100% deduction?
You are right, Varish. Yes. So because those are not for immediate, if you go and buy something in Costco, they are not for immediate consumption. Those are either pre-packaged or you can storage it. So those expenses comes only under 50% of the 50% limitation, not 100%.
So let's get some clarity on the aspect through some example. Let's say you are out of town or business and stay at the hotel where you have a kitchen in your room. So you go to the grocery store and buy food and beverages to the consume while in the hotel room. So will those expenses qualify?
Answer is yes, because those are business related, but they are only 50%. Okay. If you're spending some money at the restaurant, 100%. But in this example, you are going to a grocery stores, you are buying some items and making the food. So you are not eligible for 100%. It should be only 50%. It is only 50%.
Okay. So let's frame it a bit differently. Say you are out of town on business and stay at a hotel for 5 days. You go to Starbucks across the street from the hotel each day to get breakfast and your morning coffee prior to your work meetings.
Yep, that is deductible because at the Starbucks, you get what the food, the breakfast, it's an immediate consumption. You can claim 100% because Starbucks is preparing the food and they're selling it. They're making the coffee or other small items or food or beverages. They're making it and they're selling to the retail customers for the immediate consumption. That's important there.
Okay. Say you meet for lunch with a customer at your office. You order food, Italian restaurant, and have it delivered to your office. So will that be covered?
Answer is yes, because you are buying it from a restaurant. Whether you dine in at a restaurant or not doesn't matter. You need to get the food from the restaurant. It should be for immediate consumption. So in this example, yes, 100% you can claim it as a meals expenses.
Okay, wonderful. So you meet with a prospective client at a local restaurant to discuss working together on a business deal. So you order food and beverages for both yourself and the prospect.
Answer is yes. It's for the immediate consumption. Simple rule is immediate consumption or not. That's what you need to look for. Yeah.
So beverages are also included, right?
Yes, 100%. Yes.
Nice. You are driving from home to out of town business destination for 2 days. overnight business seminars. On the way back, you stop at a small town gas station, convenience store, and buy a hot dog and a coffee for lunch. So will that be included, covered?
Okay. Answer is no, because this is not a restaurant, it's a convenience store. So convenience store, and it's not for the immediate consumption. General convenience stores, they always maintain the storage.
And another example is you drive 6 hours from home for 2 days, overnight business trip. On the way back, you stop at McDonald's and buy a hamburger and a coffee for lunch.
Yes. Now you tell me, Varish.
I think it should be covered fully.
Yes. 100%. Yes. Because McDonald's food is ready to go, immediate consumption. So it prepares and sells to the retail customers for the immediate consumption. So yes, you are right.
And another example coming up is you take 2 clients to a baseball game. You buy a suite that provides food and beverages services, including cooked foods and prepared alcoholic beverages. Then why separately states the food and beverages expenses? So what about that?
Okay. Answer is yes, because as long as the invoice can clearly states that yes, there is a food and beverage expenses, then answer is yes. Otherwise it is no. Like example, if you are taking your client to a baseball game, it comes under entertainment. Entertainment expenses are not tax deductible. Only food expenses only tax deductible. So
okay, you provide a break room for your employees with coffee, bagel, and assorted snacks that you buy in bulk from wholesale retailers such as Costco. So will that be covered?
50%.
50%.
All these examples will help you to decide 50% or 100%, 50% or 100%. So because Costco is not as a restaurant and they don't, it's not for immediate consumption. So yep, it's a 50%.
So for break room, like if we are planning something, if we want 100%, we should get it from restaurant.
Yes, correct. From a restaurant, or maybe use any through delivery apps. So yeah,
correct. Makes sense. Yeah. You provide a break room for your employees with coffee, bagel, and snacks, and that you deliver daily from a local restaurant using a food delivery app. So it's app actually, like GrabHub or the other apps, Zomato or something.
Yes, correct. Yep. So GrabHub or Uber Eats, those apps. So where you are getting the food from a restaurant for the immediate consumption. So it is 100% tax deductible.
Wonderful. How should we document for all these expenses?
Yes. Okay. Very good question. As I always say that whenever you want to claim some expense, it should be supported by documentation. It is a mandatory, but there are some threshold limits. If your meals expenses are under $75 and you don't face a tax record keeping difference, because if anything is less than $75, IRS doesn't want to look into that. But you need to have some supporting documentation, like even bank payment, some proof. If anything is more than $75, you need to have a receipt, and also you need to list down there with whom you are meeting, what is the purpose, why you are meeting, why you are having this meeting, all those details you should have. So whenever if the expense, the total bill amount is more than $75, you need to have a receipt. If it is less than $75, you need to have at least some proof that it is a genuine. And you should also have, you should know with whom you are meeting, with a business purpose or not. But you may not require receipt. But in general, what I recommend to my clients, just bring a habit of having a documentation for everything. What as a leader, as a business owner, what you do, your team follows. So you as a business leader, you have the consistently or get all the supporting documentation for all your expenses if you want to claim it as an expense, so that you and your employees also follow the same statistic, same style.
So who fall under the definition of tainted group?
Yes. So as I was saying that employees, when you are incurring some expenses for the entertainment, it should be for employees, excluding tainted group. Who are the tainted group? Any employee or owner who owns more than 10% interest in the business, or any member of the family of the 10% owner. It means family member means brothers, sisters, including half brothers, half sisters, spouses, ancestors, meaning parents, grandparents, lineal descendants, children, grandchildren, etc., including adoptees from the form the part of the tainted group. So like example, I am constructing or I'm investing some money. I'm incurring some expenses towards a recreational center at my office. So majority of employees have to use this recreational, not minority. I mean, like example, if the owners itself are using those recreational activities, then they are not eligible for 100% expenses. If the majority are employees who are not part of this tainted group, then those expenses can be tax deducted.
Okay. So what does primary mean with respect of qualifying for this deduction?
In tax law, the words primary and primarily means more than 50%. It means if you have a recreation center at your office, more than 50% of untainted employees should use the entertainment place. So then you are eligible to claim this expense.
Is there any yardstick to measure primary use?
It is like technically how many number of hours we are using, what purpose you are using. So we recommend you to maintain some log register there. If anyone is coming in, getting out, so how much time employees are spending. So just we have to, when IRS audit happens, they specifically look for whether this location or the space is being used by tainted group or untainted group. So if it is an untainted group, then they allow the expense.
Okay. So expenses must be past the ordinary and necessary business purpose test, right? And how to meet that test?
Of course, yes. Business, if anything, if you want to claim as a business expense, the first important thing is the expense has to meet ordinary and necessary conditions. And it should be appropriate and helpful for your business. So it's like example, as we're talking about entertainment expenses, these expenses should help to improve employee morale and loyalty for your business. So that is how it's not directly, but indirectly it is helping the business. So it is a business expense for that.
Okay. So what specific measures must be taken to document these expenses?
Yes. So you must document 100% of your deductible employee entertainment expenses. Just like any other expenses, so many times we discussed about. So you need to maintain log books to ensure how much time employees are spending time there. And also, if you're incurring any major expenses, maybe annual employees gathering or annual picnic or any other major events happening, you also need to list it down. What is the purpose? Where you see a business need. It can be as simple as employee moral and loyalty, but list down on those receipts why you are spending this money. So, and also the primary benefit from these events or entertainment expenses should be for employees, not for tainted groups who has a lot of shares in the company or who are the family members are major shareholders in the company. So the primary benefit should be for the employees, and you need to list down why you are spending these expenses. In that circumstances, yes, you can claim these expenses 100% as a business expense.
So why is it so?
Okay. So why we need to write down is, if you don't write down, you mess it up. At the end of the year, whenever you're filing your tax returns, some expenses are allowed as a 50%, some are allowed as a 100%. If anything is, so what we recommend is have two separate general ledgers, line items in your trial balance or in the income statement, saying that 50% expenses category, 100% expenses category. So like we have been talking about meals and some 100% meals expenses, restaurant expenses, food expenses. What is the purpose? Based on the purpose, you need to use the right general ledger to book your expenses. It can be 50%, it can be 100%.
Wonderful. So thanks, Anil. This gives a lot of clarity. Many business owners will be benefited by using this deduction to their advantage. Anything more you want to add before we close this session?
Yes, Varish. The last conclusion I want to give is, when you run your business, try to claim your meals expenses on actuals. Don't go for per diem, because unless it's really required, because to claim per diem, the person has to travel out of the state, and there is every state to state, there are different amounts are listed down by the state departments, state governments. So to avoid all this, our recommendation, just go with an actual expenses. Whatever expenses you're incurring, you get it as a tax reduction. And yeah, as long as if they meet the conditions, they go for 100% tax deductible. If they don't meet the exclusive conditions, then they may be eligible for 50% tax reductions. So work with your an accountant, CPA, or tax pro to ensure that you are categorizing your expenses between 50% and 100%, so that you are optimizing your tax savings. That's it, Varish. Thank you very much. Thanks for this opportunity to the Money TV also. Thank you.
Thank you, Anilji. Thanks. We will meet again next week with our expert, Anil Gandhi, for another topic. So stay tuned with us and subscribe to our YouTube and Facebook channels. So bye for now. Take care of yourself. Thank you.